Up to the next presenter is Anka Metcalf with TradeOutLoud, and she's going to talk about top entry and exit rules for swing trading stocks and with an intro on how to swing trade futures. Okay, Anka, well, thank you very much for participating in today's summit, and I'm looking forward to your presentation. All right, so everyone, if you have questions, just go ahead and send them through the question pane, and I'll be monitoring questions, and I'll help out Anka as she gives her presentation.
Thank you so much, Brad, and thank you for having me here today. Thank you, everyone, for attending. I know for some of you it's really early in the morning, but Brad, you have such a great, fantastic panel today, and I was actually listening in on Bob this morning. All right, guys, so thank you so much. Good morning, everyone. My name is Anka Metcalf. And today I will be talking about maximizing profits using technical analysis for day trading and swing trading. And this will be applied for stocks and for futures in today's examples, but you can use this in any instrument that you want to trade, whether it's Forex or currencies or cryptocurrencies or options, whatever you're doing, you cannot really push forward without having the confidence of technical analysis. So my name is Anka Metcalf, and I am the CEO and founder of TradeOutLoud.com, which is a trading education firm that is specialized in educating individuals how to day trade, swing trade, and actively invest in the futures and in the equities market. I have been doing this professionally for over 16 years, and I love to day trade in the morning. My specialty is day trading indices, futures indices in the first 2 hours in the morning, and then I allocate the rest of the day for swing trading stocks and sometimes futures. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. I have also mentored traders from beginners to financial advisors and even some hedge fund traders worldwide in futures, stocks, Forex, options, and even cryptocurrencies. I am the designer of an institutional proprietary trading system, and the reason why I'm saying I'm the designer and I cannot take credit for creating the whole entire system is because I had to adapt a prop model for my trading account and for my trading size when I went retail. My system is based on price support resistance, and there are 8 layers of support resistance that I focus on. Some of them are Fibonacci's, price extensions, price retracements, some are moving averages, some are pivots, some are trend lines, etc. So I will touch base on some of the indicators that I use on my charts and some of the elements that I use in my technical analysis and my methodology. I also specialize on specific trigger times, and this is more geared towards the active day trader because this is a research that I have done for about 5 years before coming public with my market tempo. And there are certain times in the market where buying or selling are more prone and have higher odds of follow through than any time in the market. So setups for buy setups and sell setups that occur at certain points in time throughout the trading session. So I have them developed for the New York trading session, but I also have them developed for the European session as well. Specific price zones. There are 4 specific price zones on the charts that are, again, prone to HFT power. That means HFT trigger time, and also not only for HFTs, but also for institutional trading. And these are really great kept secrets because these are locations, certain hidden locations on the charts where you find buying prone activity, selling prone activity, meaning shorting or taking profit activity. I also am a true believer in chart synchronicity and divergency. There are a lot of futures traders out there that love to focus on only one element, which is one of the most common traded futures indexes, the E-mini S&P. I, however, like to trade whatever is in trade that day. So because I come from a stock trading background, I love to look at whatever is moving within a sector, whatever that sector is doing within that day. If there are earnings, so for instance, if I have on a specific day, if I have Google Amazon and Microsoft earnings, obviously my attention is going to focus to trading NASDAQ rather than trading the Dow or even Russell. So this is just a brief presentation about what I do in the markets. If you guys want to get a hold of us, our website is TradeOutLoud.com, and you can find us on social media, and our handle is TradeOutLoud. We also have a YouTube channel with a lot of presentations, and I'm pretty active on Twitter. I like to say I'm pretty active on Twitter as much as time allows, and I do post some trading ideas, whether for stocks, day trades, or swing trades for stocks and futures. So a little bit about what we do here at Trade Out Loud. We want to get everything out in the open right now, so we have more time for our presentation. Trading education classes we offer from A to Z. So we are a comprehensive trading education company that offers you the complete education, and also we back it up with our services. So we offer classes, like I said, for futures, for day trading, for swing trading, and for stocks and ETFs for swing trading and active investing. And we do provide a live trading room that I run every day from 9 o'clock till 4 o'clock Eastern, where we actively day trade futures and swing trade stocks. All right, here's our agenda for today. First off, we're going to talk about building the foundation for your next trade, the pre-planning. I think this is the most important element of the day. Then we're going to speak about how to identify what to trade based on pure price action and technical analysis, and how technical analysis helps you identify directional bias with maximum accuracy. Also, how technical analysis pinpoints entry, stops, targets, and trailing, and again, it applies to any instrument that you trade. And also identifying trading opportunities in frustrating volatile market environments. And we had a brief example in this past week, right? So basically last week we have the FOMC decision. The market took a hit right after, not after the decision, but after the press conference, where more details about what and how they will push forward. And also we had the continuation of the volatility into this Monday. And then we have the rotation point, which was extremely technical. Everything is very technical. And that is because we have so many high frequency trading computers that are trading with us. Actually, human intervention is only equates only to about 20%. More than 80% of the market volume is dominated by high frequency trading computers. So you have to be really good at what you're doing, because in trading, there is no room for average. So when you think about average, you don't want to be average, because when you compete and when your colleague is basically an HFT, you want to follow the best and you want to be the best. So basically being average is basically has a negative connotation. Is the top of the bottom and the bottom of the top. All right, this is actually a picture of my trading station in Boca Raton. Right now I'm in Detroit, Michigan, on my other office. This is my summer office. And in the wintertime, you can find me here in Boca Raton. So here's the reality of things. And this is something that every trader, every beginner trader has in common. Not a lot of traders know that there's a lot of work involved in trading, and work and homework. People don't want to hear that. People want to hear easy, give me a system, give me an indicator, give me a signal service where I don't have to learn and I don't have to dedicate all that time, invest all that time into learning something, and then I don't know what the outcome is, okay? So give me something, give me the holy grail, or sell me an indicator that will tell me what to do. And in fact, if you could tell me when to get in, when to get out, and when to exit, that's what I want to hear. Well, in the reality, the confidence in trading comes from knowing how to do trading. So how to trade. You cannot have the confidence, because if you follow someone that literally has, let's say, a signal service, or if you come into my trading room and say, hey, I want to follow you, that's fine. But you have to have at least the minimal baggage of information. You cannot just follow blindly someone, because you're putting your trust in that someone's hand, and you don't really know if that person, you're basically trading that person's trading plan, where in reality, that may work, but a lot of traders have different levels of comfort zone. So what I mean by that is that if I give you a trade right now, if I say, okay, buy Apple here, this is going to be the stop, and I see the following targets. If I go in the trade, if I execute the trade, I'm going to execute it exactly according to my trading plan, and you can follow me. But another trader may be overloaded in that trade and may take all the money at a certain target, or may not allocate the risk level that I say and that I mentioned, and may stop out of the trade. So that's why it is very important for the trader to have at least a minimum baggage of knowledge before following someone or a service. So mastering technical analysis will improve your trading because it will pinpoint you to accuracy in reading the chart, and accuracy in reading the trend, and accuracy in finding the right entries for your trades. Because when you're coming into trading, you're not just getting in the market wherever. You have to find a location, a specified location at the right timing in the market. You have to be in perfect synchronicity with the market, or you have to have, if you're going long, you have to have a stock or an index that has relative strength compared to the market or relative weakness compared to the market, right? If you're buying something, if you want to go long, you want to make sure that you are executing a trade in a stock or in an index that has relative strength in the market. You're probably going to ask, why do I need that? Well, because you don't want to be a sitting duck. You want your money to work for you, and you don't want to be in that trade just blocking your money. You want to make money. You want to execute the trade, make your money, take your money out, and then move on to the next trade. It's about knowing where to place stops. I just had a webinar this week about the art of placing stops and how and where you should be placing stops so you don't have a lot of stop outs. Stops, just like support and resistance, there's certain areas, and price, if you try to put a hard stop, you have to make sure that you give it plenty of room so these algos are not going to interfere with your with the location where you place your stop. Targets, it's all about calculating targets. What happens if you have an index that is trading at all-time highs? Let's say you want to trade the SPX, right? You want to trade options, or you want to trade the stock, or you want to trade the SPYs, that is. So whatever you want to do, what happens if you do not have any target above? It's trading at all-time highs. So what is the next target level? What is it going to go to the moon? No, you have to have a tool and a tool set, and you have to be prepared in each and every single trade to know how to execute profit targets at certain levels. Institutional traders, the reason why they're so successful, and the reason why HFTs are so successful, is because they have a well mapped out and a well pre-planned action plan that they follow. And there is a tool that you can use. There are these Fibonacci projections that you can use to determine further targets beyond all-time highs, or even below all-time lows. Trailing is an art. So if you get in a trade, and let's say the trade doesn't work for you, you have a stop. So that means that you are planned out for that trade. So you stopped out. That is part of the plan. But what happens if the trade moves in your direction and it starts moving and it starts making you money? You need to have a trailing method in place before you even enter the trade, okay? And also management, risk management, right? And position sizing. Position sizing is what's going to make or break your account. Position sizing is determined by the entry level, the difference between the entry level in a trade and the stop level. And according to that little bubble, little parameter right there, you allocate the number of shares or contracts that you're going to execute the trade with. So why technical analysis? Well, because technical analysis allows you to trade with precision any instrument. You're going to feel confident. You're going to feel secure that the decision you make is the right decision. The reason why technical analysis is so highly sought these days is because there is, like I've mentioned before, 80% of the market volume is controlled by algorithmic trading. If you have been watching CNBC 10 years ago or 12 years ago, you would probably never hear a technical level or a fib or a trend line. You would never hear an analyst come on and say, hey, and start drawing squiggly lines on the chart and looking at the 200 SMA and doing this. No, because it was more of a fundamental market environment. Now you have a stock that is gapping down like Disney and you're looking for a buy setup. You have a stock like Amazon and again, gapping down, a lot of buying opportunity there, right? So these are all becoming buying opportunities from technical levels. So fundamentals are not really that much in play anymore, right? So that's why you need to master the art of technical analysis. And once you learn how to do it, you have to work the charts every single day. So that's why I said homework is something that nobody wants to hear. But if you want to become a self-sufficient trader and not a follower, you need to learn this. Technical analysis can be used on any time frame, whether you're day trading, swing trading, or active investing. It provides accuracy, confidence, and consistency because it is a rule-based system. It eliminates fear and stress because you trade with clarity. You trade certain levels that you see in the market. And more so, algos are going to follow, right? Because they are programmed based on the same technical levels. It creates focus and it helps with pattern recognition and precise locations. You're going to find yourself not jumping into trades and not chasing trades either. So it's time to simplify trading and definitely declutter everything. Just toss everything away that you know about trading. Toss everything away from any indicator that you're using and focus on price action. Price action is king, and it's king for a reason. How many times have you been in a trade that triggered and stopped you out? How many times have you found yourself chasing the trade? How many times have you stared at the screens not knowing what to do, yet you pull the trigger anyway on the trade and you lose money? How many times do you feel lost not knowing when to enter or exit a trade? And how often do you find yourself in a trade in the middle of a news announcement? You know, I have rules. Like I said, I have those 10 scoring rules that I follow every single day. And not only that, but on every single trade. So I'm very selective in my trading process. When I'm actively day trading, I'm taking 1, maybe 3 trades a day. In volatile market conditions, I tend to sit back. And not only that, but if I find a trading opportunity within that volatility environment, I cut my size in half and double my stop because I want to give plenty of room. I don't want the fleecing game, the algo fleecing game, to take me out. So the bottom line is that you need to keep it simple and have a really good structured approach. Doesn't have to be complicated. It's time to simplify your trading with some really simple rules. Eliminate the noise. Apply a systematic approach to trading with a mathematical approach. Levels. You're looking at support levels, whether they're Fibonacci retracements, and you're going to probably ask, okay, so how am I going to use these levels, right? And when am I going to use these levels? Well, first off, you're going to look at support and resistance, and I do have some examples and I do have some charts. We're going to get to the fun part of it in just a little while. But you have to look at the technical chart. Let the price dictate where support and where resistance is going to form. If you're having an accelerated market up, regardless of the time frame that you're trading, regardless of the zip code that you trade, let the market pivot at the high. You cannot determine the exact high unless it pivots. You cannot determine the exact low unless it pivots. And then you can pull out your fib retracement and you can find out alternate levels of corrections where the market can pull back to, market or the stock or whatever you're trading, cryptocurrencies. And by the way, I find that cryptos really, really love these levels. I have some traders that love to trade cryptos and are asking for my advice. And I'm telling you, really works. All right, so apply a systematic approach is what works in the market. Natural price action is king. It's part of technical analysis. And you have fewer indicators and a few technical indicators will pinpoint high, just a few indicators will pinpoint high accuracy entries, stops, targets, and they're available on your platform right now. You just need to take a step back and look at the chart. And remember, when you're looking at a chart, make sure that you have enough information on your chart. You have a lot of data on your chart so you can see prior past action, because the prior past action will provide you the crystal ball for today's price action. It will provide you the support resistance. It will provide you the target levels. It will provide you all the information that you need to act upon. And guess what? The best of all, it is free. All you need to do is learn and master technical analysis, where if you use indicators, obviously all the indicators are delayed. Even if you're using moving averages is a delayed indicator. However, moving averages have been adopted by algorithms and they are reaction points as well. So again, you don't need any indicator that is going to tell you, oh, the market is going to try to pivot here. No, the indicator will try to carbon copy your technical analysis, but through a different perspective, through prior price action, and it's just going to delay your learning process. Plus, all these indicators will probably require you to have a monthly subscription or you have to pay up front. And they're only applicable on certain time frames. So my bias and literally my opinion is that only people that are making money off indicators are people that are selling them. So keep it simple. Technical analysis will provide accurate read on any chart and any instrument. Will override news, any artificial indicator, and even earnings. All right, so let's take a look at this chart right here. And I want to show you really quickly how you have to look at a chart. By the way, the moving averages that I'm using, the pink one right here, I guess you could see my cursor, and the pink line right here is the 10 exponential moving average. The blue is the 20 simple moving average. The green is the 50 simple moving average, and then 200, and the red one is the 200 simple moving average. This is the king of all moving averages. At some point in time, the price cannot literally stay extended for a long duration of time. And these technical lines, these dynamic support or resistance lines will call the price and will act as a magnet. This is the case of this pullback right here. Now, a lot of traders say, and I even had a discussion this morning, and a lot of traders say that, hey, you know what we had in December was a bear market. It wasn't. It was not a bear market, because if you're looking at the technical chart, okay, if you're looking at the technical chart, everything that has caused, and by the way, this is December right here, everything that caused the pullback, right? If you're looking at a higher time frame, it was just a pullback. As scary and fiery as it was a pullback. It was a correction within a monster trend that we have going on the daily chart, on the weekly chart, on the monthly chart, on the quarterly chart. Markets do not move in straight lines. Market loves to move up, and then at the sign of rotation at the bottom, you need to read the clues. Is it extended from the moving average? Is it extended from minor support? Is it extended from any kind of other support level underway? And oftentimes, market forms its own natural support zones. Take a look at this correction that we had here, okay? So we had a top. You could see that for the first time in a very long time, we had a revisit to the 20 simple moving average. We had a reversal and then a failure, and the price has hovered, and by the way, this is a daily chart, the price has hovered in this area for 1, 2, 3, 4, even 5 days before. So you have plenty of reaction here. And if you're looking to day trade to the short side, this would have been your perfect opportunity here and your perfect opportunity below the 20 SMA. So a good rule of thumb is that if the price is residing the 20 SMA, we're in an uptrend and you should be looking for long positions. If it's trading below the 20 SMA, you should be looking for corrections for short positions, but aggressive and very short-term short positions. You can see here that the market has accelerated into new all-time highs, okay, into new all-time highs, right? So in fact, this area right here, the 30-20 area, was a resistance zone, was a fib projection extended zone right here. The next target for the E-mini S&P or the SPX is into the 30, very close to the 3100. Okay, so now we have the pullback. The price, what did the price do? The price is trading below the 20 SMA. So is there any reason to stay long? No. This is the shorting opportunity right here. Okay, this is support, right? Things can bounce off this levels, and you could see that actually we had a shallow bounce right here. The price came into the 50 SMA, did not find support into the major support zone right here, and the price slid lower on Monday. Again, this is news driven. This is algo driven. The reason why we're having such drama in the market is because the algos are triggering level to level to level to level, and they're creating the snowball effect. But hey, there is a very mighty moving average right here, and this is the 200 SMA right here. 200 SMA, we had the rotation of the 200 SMA, and we had a really huge push, and I mean huge push, over 120, 140 points here, push to almost a 50 SMA. You could see how the price top here onto the 50 SMA. You could see the doji-like candle finish into Friday. And by the way, this Friday's charts right here. There are two things that are going to happen on Monday. Number one, you're going to see the price accelerate higher back into this resistance band. And if it breaks this resistance band, it's going to go back up, resuming the uptrend. Don't forget that last year, we had a very impressive rally going on in August. There's no such thing as sell in May and go away, guys. That was probably about 20 years ago when the market was not dominated by algorithmic trading. Now we have very active trading season and even into the summer. The other thing, the other option is that if we trade below Friday's low, we may enter back into a correction that may take the price back down in the S&P or SPX or E-mini S&P back to $2,800. Here's a chart of the SPYs. Now, although I know a lot of you may not look at futures and may look at the SPYs, and here's the chart of the SPY. Same dramatic move to the downside. You can see that this is resistance that now is transforming and acting as support for current price action. The rally point from back here where the market ran back up into the prior high. Again, resistance, forming resistance at this point. Take profit here. If you want to go long again, look for the correction. Sit on the sidelines. Don't short in an uptrending market. I'd never short in an uptrending market, but I have the patience to wait. And in this case, if you don't have the patience, you don't have the money. So I wait 1, 2, 3, 4, 5 days, right? But on the 6th day, so what? I just wait 6 days. So the next day, but by the way, you can still trade a lot of stocks that were acting super bullishly here, right? So you enter here, you have a really nice gap up, continuation higher, pull back. Here's your secondary add opportunity, or you could actually execute as a second trade. You have another move up. Look at where the pullbacks are happening, right into minor support. These minor support zones, like we have here where my cursor is, or even here in this area, or even this bottoming effect right here. These are more prone to rotations and reversals than major support zones. They're more significant. Let's get to our current days right here. Top We fell below under moving averages. Here's the 200 SMA right here. We are bouncing off of the prior support zone from this prior pivot low that you can see my cursor right now. This is an impressive move to the upside, and right now we're top again right into the 50 SMA. Again, doji-like style candle in the SPY as well. So the game plan for Monday is that if we trade above Friday's high, we're going to navigate higher back into the 296, 295 and 296. We're going to have another confluence over here and decision zone, but if we power through, we're going to go back to the high of the day. If the price is going to get rejected, and we're going to try to, and if we're going to open and trade within the prior range and remain weak throughout the trading session, the more we close towards this bottom of Friday's close, odds are that we may actually continue the ride back lower. Here's a weekly chart. So definitely very strong. This is also does not only represent the Friday high, but also represents the weekly high. So the weekly high actually points out in a really good solid direction if we break above this week's high. So obviously the odds are we break above the high, we're going to go higher, and I'm going to press the pedal to the metal on my swing longs. Okay, hope this is useful, guys. All right, so technical analysis helps you find trading opportunities in any market and in any style of trading, whether you're day trading or swing trading or actively investing. And the best of all, you only have to learn it once, and it's there for you. It's an investment in yourself and your education. And by the way, guys, we're all traders here. This is a recession-proof job, a recession-proof career. Nobody's going to take away this knowledge from you. You lose your job. You want to quit your job. You don't like your job. You want a secondary income. Trading is the way to go. I had to leave a very comfortable job to devote to trading because I wanted to trade for myself. I saw the potential there, and it wasn't easy, but I gave it a shot, and it worked for me. So technical analysis will teach you how to trade price action. It's going to teach you how to read past price action and how past price action is going to influence future price action. Just like I showed you on the charts, it can provide you the information where you can make diligent decisions about your trades and about the next direction in the market of what you can expect. It will show you the interactions between buyers and sellers. It prevents you from chasing the trades. It will tell you when the right time is to buy or to sell using precise trigger points that are very easy to identify, just like I showed you in the charts. If it's trading above the prior week's high, boom, pedal to the metal, I'm going all along, okay? And then when to add to a trade or apply damage control. This is a thing that not a lot of people are diligent about. And no, you can actually save a trade. You could actually save a trade by applying damage control. And I teach a class on that, on damage control. And I find that, it's very interesting that a lot of traders panic. Let's say you're trading stocks, right? And all of a sudden, obviously the futures markets work overnight, right? And they, they get different numbers, from Japan, obviously from Asia, from Europe. Europe is the big contributor here and the biggest trader for the overnight trading session. So, when we wake up and when we pop up our platforms at 9 o'clock, and we start trading at 9:30, you're going to see a shift in price, right? The market is either going to gap up or gap down if it's not going to be flat, right? Meaning that there was no overnight price action activity. It was a flat market overnight. But oftentimes you see a gap up or a gap down, especially in earnings season, right? So a lot of times traders that are long and they find themselves that, their stock has gapped down, they go like, oh my God, what do I do? They can't wait for the market to open to close the trade, and they're going to get filled on the worst possible price. Well, guess what? There is a methodology that you can apply for your trades to try to savage your trade, to try to save your trades. So that is, I think it's very important for you to do that. And the most important thing, I'm just going to give you just one idea what to do. Be very patient, look at the technical levels, and wait for the 30 minutes to 1 hour of the trading session, because oftentimes the market is going to try to find the balance within the first 30 minutes or first hour in the morning, okay? And look at that low. Possibly you can add to your trade as if it's a separate trade, so no additional risk to that. It's your allocated trade for that current day. You could bring your average down, et cetera, et cetera. So anyways, I'm not going to get into it, but there's a way that you can do that and teach you how to trade like an algo. This is what technical analysis is. Technical analysis does not, and algorithmic trading does not move based on tweets or based on fundamentals. No, it trades on price levels. And even if you're getting a tweet, or even if you're getting some news, right, levels are still going to be respected, because technical analysis overrides everything else. So regardless of what you're trading, stocks, futures, options, forex, or cryptocurrencies, you can apply the same principles. As a keep it simple approach to my trading, I use just a few moving averages. I use the 20, the 50, then the 200 SMA, and I use the 10 EMA, mostly for dynamic moves when you're having a really sharp power trend to the upside, right? The price tends to follow the 10 EMA, so that's why it's there. I have volume because I want to make sure, I want to know the market participation, and even when I'm trading stocks, I want to see a lot of volume. I don't trade stocks that don't trade at least 1.5 million shares a day. I don't. If I see a stock that is trading, or someone's bringing to my attention a stock that's only trading like 100,000 shares or 200,000 shares a day, I'm like, toss it. I don't care. I'm not even going to look at the technical chart. I could care less about it. So I look for a heavy volume stocks. I also use fib retracement and projections, because I want to see, once I have a pivot high, I want to see, is that going to be a correction, and where is the price going to correct into? And then I look at my confluence zones, right? I have to have 2 or 3 or 4 more elements for that shelf of support, for that shelf of support to form, and for me to take a diligent decision to say, hey, you know what? I think we reached kind of like a bottom here. I think we could try some aggressive longs, or we're going to go continue to short. And also price, which is king. Okay, so first of all, to identify trades I use, right? So what do I use? First off, patience. You have to have the patience to wait for the trade, and you have to wait for the trade to set up. What do I mean by the trade to set up? You need to see it pull back into your specific level, and then it needs to rotate off of that level, confirming a buy or confirming a sell, depending on whether you're going long or short. And I get it on confirmation. Okay, that is the most conservative approach. Of course, you could have an aggressive approach where you could buy it right on support. You could use a tighter stop, but your incidence of stopping out is really high. Basically, there are 2 strategies that I use every single day. I teach a plethora of strategies. I think I teach about 10 strategies in my classes. But basically, when it comes down to trading in the trenches, I use 2 strategies every day. Pull back buy and pull back sell off of these confluence zones, and breakouts and breakdowns. I am the breakout or breakdown queen. I love ranges. And the market in nowadays is either having a big push to the upside, ranging, or it's breaking out or breaking down, right? So always follow the trend. I don't short in an uptrend, okay? Don't short, have no interest. I go for a walk and come back. If I have it, I set my alert to my support zone, and then I'm interested in buying it. This is a quick example of a gold trade right here, and this is the analysis for a gold trade. In fact, it's the presentation that I had at the Traders Expo a couple of weeks ago in Chicago. And you could see here the trend, right, which is drawn with a green line. Look at the trend right here. Rotation off the trend, rotation off of the trend, rotation off of the trend. Look at the massive move to the upside. We played this several times. We've played gold several times, and I'm out. I closed my GDX and gold, whatever I had, futures, trades out, because right now, even though we're flagging on the 4-hour in gold, I think that it needs a little bit more digestion, and there are higher prices. I'm going to show you that throughout the year, I'm going to look for a better setup than we currently have right now. And then within the uptrend, we have a range, right? Bottom, top, bottom, top, bottom, right? And you can see that we're trying to form another uptrend within this range. This chart is from last night. I pasted in here just for this example to show you the power of these ranges. The best moves and the best profits are coming from breakouts or breakdowns. Of course, in strong market environment and strong markets, breakouts are the way to go. So you can see here that the price here has been trying to range in a very choppy manner. Once it executed the breakout at the breakout point, bam, it made a new high. Look at the acceleration. And then it stalled again, right? And then we see the range, and then we see something very interesting develop within the range. We have a smaller range develop within this tighter range right here. And then this is it right here, the 40-20. This is the glue that the price needed for its abrupt move up. What is this? The confluence zone. Bam, you have the 200 SMA, you have major support, and then the price rallies. Notice that the price needed some time before it caught up, before the 200 SMA caught up with it. Didn't it? Right? All right, so things look simple when you know how to handle technical analysis. So where's gold headed? Okay, so this is a chart. Again, this is a monthly chart, right? Higher time frame, so you can actually try to see where gold can run into. You can see here that we had a first resistance zone, which was the major breakout zone at 1400. Now it's trading at 1500, which is just about here in the middle. But guess what? Do you think it's stopping here? No, the next target is right here, very close into the 1580 and the 1600. And this is only pure based on price action. We have these bottoming, we have this bottoming that happened throughout 2011 and 2012 that are going to create resistance in 2019. And if the price is not going to advance into the end of the year, probably in 2020. So this is price memory at its finest. This is also a monthly chart with retracements. You could see the swing low to the swing high, and you could see right here the targets. And again, we have 1600, which is 1580 that I mentioned, right into this meat of the candles right here into resistance. And here it is, 1580. So this is going to be your next target in gold. So depending on how gold is going to trade, I would much likely love to see a pullback at least into the 1480 before I engage into a different trade. All right, here's some examples of the gold and the power of technical analysis. You know how to read the chart. You know how to identify entries. You have a clear game plan for your trades. This is how it translates. It translates into pinpointing entries, pinpointing targets right here. You could see it. And this is a trade that we've executed in the trading room. It was actually a swing trade. And by the way, if you have a smaller account size, you can still trade gold futures. You could trade the micro futures, which are super potent, especially, and I even traded the micros. I had a plethora of micros. I bunched up a plethora of micros because the stops were really wide. We had about $20 risk. $20. If you trade the micro, that's only $200 per contract. So you can still trade it. So you have no excuse looking at a chart. And now, and especially with the futures micro indices, wow, really great to have, really handy. So the math on only one contract, guys, right? The math on only one contract. Our entry in the trading room was 1425. The target was and by the way, I made this public on my public Twitter feed right here. So like I said, I do post a lot of trading ideas. Entry 1425. These are my exact targets. Hit all three targets in 3 hours. Profit $2,500. I know there was a question in here for Bob, and Bob answered it brilliantly. You know, there was a trader in here that asked, okay, how much time are you going to stay in a trade? It depends on the market environment. If the market is sideways and is not doing anything at the time, you're probably going to stay in that trade. If you're carrying a swing trade or an option trade, you could be in that trade, I don't know, for a week or for a month. But if you're getting a dynamic move in the market, you can have an example like this and you can take profit on a swing trade in 3 hours. Okay. So, and this is what is very typical for a volatile market. All right, this is another trade that we have executed in oil. You can probably see that oil and gold has started to move this year quite substantially. This is the math on only one contract. This trade was executed on July 17th, so just about, I don't know, a couple of weeks ago. So 57.50 was our entry. These are the following targets. All the targets were hit in 2 days. Okay, profit, $2,100 per contract. Depending on your risk amount, you could, on your risk size, you can use multiple contracts. All right, here's another example. Oops, sorry, I went backwards. Okay, all right, and here's an example, and this is from one of my students right here. This is a clip from one of my students, and this is in 1 day with one contract. You only need a margin requirement about $3,600 or so to trade gold. These are some other examples right here that I posted on the private Twitter feed. And the reason why I have added in here to show you the power of technical analysis. Now, this tweet was posted on July 16th at 11:58 a.m. And I was mentioning that I'm considering some counter daily trades if they trade under yesterday's low in YMES, NASDAQ, and Russell. These were my focal areas. And you can see here, this is the trade that I've executed. Focus areas 30, 12 to 30, 10, and it broke it. Okay, here it is. Okay, because because the S&P triggered first, here's what I'm looking for. And I posted the targets for everyone to see on my public Twitter feed. Okay, and targets are the following, and then if it's going to reach 94 to 86 area, that is going to be buy book. That is going to be a buy in my book. So I'm going to go long there. You want to see what happened? Ka-ching, major ka-ching. So we shorted it here, bam, went exactly to our target, and guess what we were looking for here? We were long again. Okay, and this is the power of technical analysis. Okay, so these are some examples of how does this translate into a contract? How does this translate into money? Well, you would have made about $1,600 on this move. Okay, and this is the buy zone right here. See, I mentioned 94 to 86 buy zone. Here it is. These are the levels. Okay, these are the levels, but they're confluence zones. So this is an add-on to the Fibonacci. This is an add-on to major support resistance. This is an add-on to moving averages, etc. So you have to know how to find these confluence zones. These confluence zones are reaction zones. All right. Here's a trade that I posted this week in McDonald's. McDonald's long at 215. Here it is. I know there are a lot of stock traders in here. 215 on a breakout. Love the breakouts. I'm the breakout queen. If there's a breakout out there, all my traders are bringing it to my attention because I love breakouts. And you should love breakouts too. It's one of the simple strategies to identify. And if you know how to locate these clusters of support or resistance, they're going to be your ka-ching, ka-ching machines. All right, so breakout at 215. The stop is going to be into the 50 simple moving average. And I had a target into this prior high right here, and the next target on projections. The risk for this trade, if you applied a risk for this trade on Monday of about $2,000, the trade trigger, I think it was on Wednesday. On Wednesday it triggered. Yeah, on Wednesday it triggered. On Wednesday I got in. So on Wednesday it triggered. It pushed really hard higher. So you would have risked 1R right now, and the trade is still in development, so the trade is still active. Okay, so I know I'm getting a lot of questions about, okay, what trades should I trade in to stay away from the trade war, of the U.S.-China trade war? Trade stocks that are not influenced by the trade war. Don't get into the Apples. I mean, Apple is a great opportunity. In fact, I didn't take Apple, but it had a textbook breakout. I didn't personally take it, and I was I have to admit I was a little hesitant on that one. I was a little chicken on that one because I know that it's highly influenced. A tweet goes down and Apple goes down, because it's captured within this trade war thing. But look for stocks like Kroger, McDonald's. I've highlighted Kroger. I've highlighted McDonald's on Twitter. These are stocks that are outside of the trade war. Even Microsoft, AMD, Google, everything that is outside of the China war. Okay, so profit on this trade in just 3 days. 3 days, if it's about $2,000 on this trade, and it all depends on the risk level that you're comfortable with. And I'm looking for more profit on that trade, so I have my next target into 231. Costco, again today, Costco pulled back, really nice pullback here into the 50 SMA and rotation here. Look at it go. This is, again, it's not influenced by the trade war. You risk 2,000, you would be up right now to about 4,000, and I'm still looking for about 280. So profit on this trade, I'm looking for about $4,000. It's still running. Okay, Merck, this is another trade that I'm in, and obviously called it in the trading room. And Merck long at $83. This is our entry. Again, this is a breakout. Okay, by the way, Costco was more of a buy setup off of a Confluenza, but I have Merck here, and this is my entry, this candle right here at $83. My stop under these lows right here, $81, and guess what? It's still running. I have a profit target on it of $87 and still running. I see this as the medium term kind of trade. So profit on this trade, probably looking for $4,000 or $5,000 and still running. All right, so trading is about knowing how to put the puzzle together. It's not about learning one strategy. It's not about knowing where should I enter, where should I put my stop, how should I calculate my targets, how should I manage it, how to position that. It's about putting the whole entire puzzle together. Only 10% of the traders know how to do this. That's why the failure rate is of 90%, because they don't allocate the time to learn technical analysis, and they give up. They blow up their accounts and they give up. They say, no, it's not working. This is not good. That's not this. It's the market's fault. It's whatever. No, it's actually your fault, because you need to allocate time to study. So elements that go into each trade, right, before the click of the mouse, you have to do a really dynamic when you're having you have to look at the market dynamics. You have to look at the market structure, analyze the market, analyze the indices first before you go into trading a stock. Then analyze, if you identify a stock, analyze the sector. Make sure that that stock is the strongest within the sector if you want to take it long. Perform the market analysis. Do the multi-time frame alignment analysis, pinpoint your entries based on technical analysis, accuracy in determining the stops. Remember, stops, just like support resistance, they're areas. They're not going to be like, oh my gosh, I'm going to put my stop exactly at $82.00. You're only asking for it. So if you have put stops at round numbers or just very, just a few cents away from round numbers, you're just feeding the sharks. Okay, so make sure that you get plenty of room for those stops, and calculate them, and your position sizing, obviously include them. Establish the targets. Make sure that you have a trailing plan. Control your risk, money management, psychology, etc. So what goes into a trading plan? Okay, what goes into that pre-planning? First off, before you even pop up your computer in the morning, you have to look at some things, right? And what are the things? Economy for the day. What is moving that day? Whether we had unemployment numbers, or if we have a pending FOMC number, FOMC rate decision, et cetera, whatever it may be, make sure that you are aware of the economic events. I know a lot of traders that like to trade, that are getting in oil head first, and they say, oh, oops, I forgot oil numbers. Oh, I'm out. Oh, I stopped out. Okay, so make sure you're not one of those traders. Pay attention to earnings. We still have a few weeks of very active earnings season. Pay attention to the market tempo. Make sure you do plenty of chart analysis, and choose the trade that is in play that day, depending on your price action, on the relative strength or the relative weakness. I find that swing trading is the easiest way to make money in the market because you're trading off higher time frames, your stops have higher odds of holding than in day trades, and best of all, you are staying away from high frequency trading. So is swing trading right for you? Well, if you have a full-time job or a part-time job, it's for you. If you want to trade less than about 10 minutes a day, it's for you. But remember, there's a disclaimer here. You have to do your work. If you decide to trade on your own, you have to do your work in the weekend when you have some time. Dedicate at least a couple of hours, Saturday and Sunday, to do your market analysis. Scan, or you can use a scanner, find some stocks, set them alerts, and then it's only about a 10-minute a day management on each and every single trade. You can work, the beauty about it, you can work from home or anywhere. You can travel, you can go on vacation, and you can still be in swing trades. You can swing for income or supplement your income for wealth and make money work for you. So bottom line, it's all about confidence. Why? Because you have the confidence, you have, if you have the knowledge, you have the confidence. So a lot of traders are asking me, and non-traders are asking me, you know, is trading risky? Okay, is trading risky? Well, I have the same answer. Trading is just like driving a vehicle. Trading is like learning how to drive. At first, it is really overwhelming because you have to keep track of the gas, the brakes, the mirrors. Your head is spinning around so you don't crash. But once you get used to it all, you don't have to worry about anything, and everything comes as a second nature, and all your concern is about getting to your destination. Okay? Now, how many of you guys are getting in the car right now and saying, oh, oops, gas, brakes, mirror, seatbelt, you know, like you don't do that anymore. Everything is second nature. Trading is the same. I promise you. So in trading, you're going to keep track of your entry, your stop, your market condition, your taking profit, etc. But once you get used to it, it becomes instinctive, right? So wouldn't it be wonderful to have someone that can teach you all this? Well, I teach a class, and I teach this swing trading and active investing class only 4 times a year. September is actually the last time this year when I'm teaching the class. The next class is going to be in January. And this class, I will teach you everything about swing trading and investing, starting with candlesticks, starting with technical analysis, continuing with setups and patterns, with trading psychology, with position sizing, how to scan, useful websites, what to do, everything. It is a 10-day live class. Your head is going to be spinning. So I will teach you how to determine laser sharp locations for your entries, where to place your trades, how to evaluate market conditions with a synchronized analysis approach, get my favorite swing trade setups, plus the exact formulas for entering, managing, and exiting the trades. Advanced technical analysis that you can then apply to day trading or swing trading, any instrument of any kind. Money management techniques, my approach to winning strategies for profits, trading psychology, scanning, how to scan. All right, so the class is September 16th through the 27th, and the class is taught, like I said, only 4 times a year. You're also going to have access to 30 days in the trading lab. If you are interested in this class, the class tuition is $49.95. And if you're interested, you can shoot us an email at info@TradeOutLoud. No obligation. We will send you the full class curriculum just to prove to you that you will learn so much in this class. You will never need another technical analysis class ever again. All right, guys, thank you so much. Thank you, Brad, for having me here today. If you guys have any questions, shoot me an email at info@tradeoutloud.com, and more information about the class at tradeoutloud.com/swing trading. Thank you. Have a great day.
Okay, Anka, thank you very much for your presentation. Much appreciated. I just see just a couple quick questions that I can answer like in 10 seconds here because we're already running late. But one person said, which platform could I use to trade options? For me, my personal opinion is take a hard look at the TD Ameritrade platform. That's the Thinkorswim platform. It's very good for options trading. You basically live within the chain. That's where you would need to be when you're trading options, and it's built around the chains.
I agree. I use TD Ameritrade for options, for swing trading, stocks, for day trading, futures, day trading stocks, for everything.
Yes, it's a very good platform. So you always want to take a look at, Thinkorswim, and then of course, look around and see what else is out there. Let's see. Can we have recordings of all of these presentations? Yes. So when we're finished, the recordings will be sent out to all of the people that registered. Okay, we have a few technical questions which we don't have time to get into. Something was on the SPY. Also, one person asked about, this is Ahmed. So Anka, when you have the chance, I'll send you, the people that registered. So Ahmed, A-H-M-E-D, he had a bunch of questions. You might want to just reach out to him and you guys can talk directly.
Absolutely. Ahmed, shoot me a question. Yeah, Ahmed, if you're here, just shoot me an email at info@tradeoutloud.com with your questions.